Hey everyone, I'm Charting Man Dan. I've been trading the cannabis sector the last 13 plus years, and we're going to check in on the sector and the charts as we had a pullback today right to our hourly back burners where we were waiting for bounces. We're going to do some trade review, talk about the bigger picture and where we stand, and also the clues that told us consolidation was likely shaping up. Before we get into it, I did a 45-minute call with Aaron from Carnivore Trades yesterday. That was posted. The link is in the comments of this video. And I suggest watching it because, this video is going to be technical analysis and talking about things, but he was asking me questions like, what do we look for to take profit in euphoria markets? Where do we look for, longer term entries, things like that, and more psychological based and bigger picture kind of things, very useful info, whereas we're going to get pretty specific in this video. So we had a pullback today, and this pullback was due. And it's a bit frustrating for me as a content creator because, I want to make everybody, some people accuse me when I start talking about, hey, we're going to pull back 10, 20%, just so you know, be ready. And it's healthy, it's expected. And, people will say, oh, you're just spreading FUD or you're trying to short and make money or whatever. But aside from that noise, which is easy to block out, the analytics are so different. If I make a post saying we're going to the moon, I'm going to get 150 likes on Twitter and, 9,000 to 12,000 impressions. If I make a post saying, hey, we're likely to pull back 10% from here, hourly oversold conditions, we're looking for that bounce, actionable information that is useful, that's going to get a third as many likes and a third as many impressions. And it's just because people don't want to hear it, or maybe, I don't know. It's just frustrating because it's like, I told you this was going to happen. This is the opportunity. This is the hourly back burner that we were looking for. And so I was trading this sector today on a big red day. I traded this sector long more than I've traded this sector in a day this entire run up. I've traded, but I'm buying this dip because this is what we were looking for, hourly oversold back burner. So we had a tight sideways range after the double top. So we know we double topped to the penny at 1064 and bears win the short term. It was just two levels, 978 and 1064. Bounce off support, reject from resistance, bounce off support, double top, break support. And so we go on over to our handy dandy chart guys indicator, which is on our website for sale, back burner. Look where it triggered. So it triggered down at about 956. I bought right there. 958 I think was my fill. I'll show my orders here in just a moment. And just played the hourly oversold bounce. And I exited a bit quicker, knowing it's just a day trade because, I'm not trying to I've got my longer term swing. It's doing its thing. If I'm trading long day trades, I'm a bit quicker to take profit. So I was exiting MSOS. I think I only held it for a 2% move and definitely sold it 2% too early. But I was also trading Trulieve. We'll talk about that bounce in just a moment. And so that was more focused for me. This was a secondary trade. But where do we stand from here? Back burners. I cannot stress enough getting comfortable with back burners. They are ATM machines in a strong trending bull market. So MSOS, we're not watching. Is this time for weekly consolidation? And because of the setup where Sneed or whatever his name is says we're getting news this week, and then we double top, and now if we don't get news this week, and we don't get news over the weekend, we're probably going to start weekly consolidation. What do we look for on weekly consolidation? In an ideal world, hourly oversold marks a daily high or low into continuation. That's when you have your strongest trend. And it's ideal when hourly oversold aligns with daily EMA 12. When's the last time we got there? We got right down last daily consolidation where we bounced off daily EMA 12, right on hourly oversold. We might have got down to about 31 RSI, but then we saw continuation. That's what bulls want to see. If we don't get that, if we break 955, and after hours there's a little sell-off here, people thought Biden speaking after hours might mention it. He didn't, so people sold, not much, $200,000, but if we drop and break 955, then weekly consolidation will be on watch. And then we look for a weekly high or low, ideally holding weekly EMA 12, which will be at about 850 to start next week. Weekly consolidation is inevitable. It should not be feared. I was on the Dales report yesterday saying, do not fear this weekly consolidation. It's inevitable. I'm going to be looking to buy a weekly higher lows. For swing trade positions, hourly oversold for me is a day trade. Weekly will be more of a swing mindset. So hourly downtrend is our guide. We have a new resistance now, 10.06. If we do not break 10.06 tomorrow, bears keep short-term control of the hourly trend. Trulieve. We knew. I was 80% sure that we were going to head to hourly oversold conditions after yesterday's candle. I'm going to now cut to a clip from the Dales report showing the market, me calling out the market makers saying, I see what you're doing. Yeah, so this is something, you know, back in my penny stock trading days on the OTC, we didn't gap up at any point during a massive euphoria run here. Wow. And we gapped up today. Why did that happen? It's not supply and demand because there's no pre-market trading. We gap up because the market makers determined that that's where we're going to open the price. Today makes no sense that we would gap up. It was the most bearish morning with a little bit of overhang. You know, the headline from a couple sources saying, well, you know, we haven't heard anything is coming. You know, everything was opening lower today. Why did Trulieve gap up? And that, in my opinion, is the potential that market makers are marking a temporary top. And again, nothing to fear. We are very due for daily consolidation. I'm going to be watching for first hourly oversold conditions to look to play a bounce. That at the moment would probably take place around the lower $10 range. That'll be a short-term trade for me. But again, if gaps, generally speaking, if you go back and look at MSOS and all these things, gap ups mark daily consolidation more often than not. And so that to me, I mean, look at that big red candle. We call that a red Marubozu candle, which means the bears had complete control. And the reason the bears had complete control is because the market makers shaped it up that way. We didn't gap on the Canadian side. We gapped on the US side. I see you market makers. I know your games. So like clockwork, we open right at the low of yesterday. We break it and we dump. 15-minute RSI got down into the teens. That wick there we didn't really get down into the 940s. I mean, technically you can say we did, but you know, you see the volume behind that candle? That's not enough volume to flush the price 5%. As far as I'm concerned, 970 was the low of the day. But that's just, you know, nitpicking. But we then got hourly oversold, a beautiful bounce, and from the low of 970, it ended up being a 11% bounce, almost a 12% bounce. Beautiful. If we're going to remain our strongest, that's hourly oversold, marking a daily higher low off daily EMA 12. What do we need for that to be the daily higher low? We need to hold the low and break the high of the bounce, 1085 tomorrow. If we confirm an hourly uptrend tomorrow, that's a good sign for that marking a daily higher low. If not, we're going to look for weekly consolidation, just like we will in the rest of the sector. But nice bounce, all about the hourly trend as our guide as we watch for the daily to try and set higher lows. So let's now pull up, go over some of my trade review today. And I had a lot of trades today, so I just picked them out. So 1018, grabbing some TCNNF. I'll enter one more in the 970s if we get there. So at 1018, that was an initial low right there. So here's 1018. We then bounce 4%. So what I do and my style of remaining in control of the trade is I make an entry, and then if the bounce starts getting underway, I start scaling out. So I get filled at 989, and I start selling. So I sell some at 1012, so 2.5% gain, some at 1015, 2.5% gain. Now I have a third left. I didn't sell the whole position because I want to play for the hourly bounce, and I got something in my eye. So I sell 2/3 of my position. What's my break even now? I don't know. 21 cents and 25 cents. So my break even now is 46 cents under my entry. 942 is my break even. What do I have to worry about? Absolutely nothing. My break even is 942 on my remaining position, and I'm just waiting to see this bounce play out. We then get another leg down. I said I would add another one in the 970s. As far as I'm concerned, that's 3 pennies from the bottom. So I bought at 973. I then bought MSOS right then as well, and that was off of the low of the day by a couple pennies as well. Again, my back burner alerts are firing, so I'm firing out orders.
So I rebuy what I sold at 973. Now my break even, that's averaging up a bit. My break even's probably, 960 or something. And I got 959. I ended up selling my MSOS at 978 or 970s. Why did I sell MSOS in the 970s? What was our key hourly support level? 978. Look where we struggled on a bounce. It's not a coincidence. We topped out there to the penny before another leg down. And then we struggled again. I was exiting on these candles right here. And again, that was so I could then focus on Trulieve. It kept going. It would have been fine, but I was just locking in my 2% win and shifting focus. But we ended up confirming the 5-minute uptrend. So for Trulieve, then at that point, I just start scaling out again. Scale out some at 1027, 1049, 1060, and then all out. Just a nice, very solid trade. So, when it's all said and done, with my position, it ended up being about a 9% gain. Cannot stress enough, hourly back burners and practicing. Practicing trading them with small positions and getting accustomed to exiting when there's signs of weakness and re-entering in our signals, our back burner signals. First hourly oversold. Let's see where this back burner fired. Again, keeping in mind 970 is the low of the day as far as I'm concerned. Got right down. Looks like it needed that lower wick there to trigger hourly oversold. So it did trigger in the right around 950 or so. But nice. All right. So on the hourly, that's our guide. GTBIF. This is a rising wedge. So again, if the sector is going to see weekly consolidation, this will break bear. It's already on the verge of doing so. If we drop down and break $13 for GTBIF, then weekly consolidation is very likely taking shape. Next level from there is 1257. But again, we're just going to look for a weekly high or low. Look at these back tests and holds of the EMAs. Held it here, held it here, held it here. So as long as we can hold that level, no red flags. Curaleaf, same deal, chopping around, struggling a little bit up here, but key level 525. Bulls really want to maintain 525. If we lose it, we're shaping up weekly consolidation. Wow, that's a double top. That's worth paying attention to. I didn't know we still had a double top here. That's why we're struggling to the penny. Failed by a penny, failed by 2 pennies, failed by 5 pennies. Bears are defending the HHS reaction high, and so far they're winning that defense. I'd love a cup and handle here. Give me a weekly bull flag. And we're going to talk about OGI. Same pattern there. Let's talk about OGI now. So again, full disclosure, I got MSOS, I got OGI, I got MNMD, I got TSNDF, but OGI, tried to tell people on Twitter, people don't care. Look at this, 26 likes. If this was an MSO post, it would have twice as many. Weekly charts, CMPS on the left, OGI on the right, trying to give some deja vu. That's me saying, hey, look to grab a position. We're looking to break out here. And so, again, it was the exact same setup. These charts, just deja vu. CMPS, weekly, fail resistance, bull flag, back test EMA 12 and 24, which are crossing bull for the first time in months. Bull flag confirms. And CMPS from that low went up, 70% or whatever. I then see the exact same thing on OGI. Fail resistance, bull flag, back testing the EMAs as they cross bull for the first time in years. So I'm in at 176, my stop's under 155, and now very comfortably profitable as the bull break confirmed. And not only that, we have been seeing relative strength in this name, perhaps due to some Germany exposure, but the back tests are key. Our resistance zone was 196 to $2. Reject, 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 breakout, back test, continuation. Perfect. Exactly what the bulls want to see. CMPS is also back testing its resistance zone. 1012, 1018. back testing on the daily consolidation, bouncing right off of it. No red flags. If CMPS, that's now putting our key support at 988. If we break 988, we confirm the daily downtrend. Then we get a bit of a red flag, but new benchmark, 988, full control for the bulls. So I like OGI, plenty of space for another daily high or low. It's in my IRA. My position size is not big enough for me to be looking to take profit yet. My target, I'm looking upper $2. Ideally, I want to hold this position until we get, and we have to keep an eye on when earnings are. TradingView is really bad at knowing when earnings are in this sector, but ideally, I want upper $2, and I want to hold this position for DEA news. We'll see if the bulls can maintain the daily uptrend to keep me content, but really liking the fact that, we were up 20-some% Tuesday, healthy consolidation yesterday, and then continuation today on a day where the vast majority of the sector is red. So glaringly standing out today. Other Canadian names, just not cutting it. TLRY, daily lower high at 201. If we're not breaking 201, nothing is changing. CGC is junk. Heading back to the lows. Yes, these names can spike and short squeeze out of nowhere, but I need bull volume and momentum to have any interest. I will not enter these names into weakness. Just choose a stronger name. OGI is clearly the strongest Canadian name. It's been telling us that on this chart for months. And in the last 3 days, while these other names are red, OGI has gone up 26%. I choose the strong names that earn my capital. This OGI is saying, hey, I've got a bullish setup, I've got an uptrend, I've got a key resistance test, and it earns my capital. CGC is in free fall, hitting new lows in a downtrend. Nope, don't deserve my capital there. That's opportunity cost for my capital to be elsewhere, especially in a raging bull market with so many strong things these days. TLRY, it's tight. It's just got to break the daily lower highs. We've been setting daily lower highs for weeks. Do something, bulls. Do something. Tell me that I should be in this name bullish. Weakness is not the way to do it. All right. Tier 2 names have given us a heads up that this weakness was coming to a certain degree. We had, I know AYRWF had the whole warrant thing, but talked about how this was a daily bear flag on the Dale report yesterday. It has now confirmed. Weekly consolidation is underway. So weekly consolidation started first in AYRWF and also in, there's another name, I forget who it is, but there's another tier 2 where weekly consolidation is already underway there as well. And so now the question is MSOS and the tier 1s going to follow next week if we don't get this headline, and that leads to a bit more selling pressure. All right. We'll see. Weekly consolidation is inevitable. 10 to 20% pullbacks in a volatile market are inevitable. Establish your game plans. Learn so you can capitalize on these volatile opportunities. But I don't know what I was going to say. Do good things. Appreciate the likes and the shares. That'll keep the content coming as long as you keep giving me the analytics, and give me analytics on bear posts as well, because they can benefit you. It's not always sunshine and rainbows. Do good things.